Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So it's now official. Google searches for the phrase how to trade gold, that is now at the highest level ever on record. Now this of course comes as no surprise, considering that almost 70% of people, they're increasingly concerned about the safety of their money in the banks, as financial institutions around the world, they struggle to service their debts due to rapidly rising interest rates, liquidity challenges, and the banking sector. As interest rates they continue to rise and liquidity continues to dry up, those concerns, they're only going to get bigger. It seems incredible to think that just over a year ago, interest rates, they were still near zero. Now 13 months later, and after 10 consecutive hikes, the Federal Reserve, they have increased rates to 5.25%. That's the highest level since 2007. In a similar way, the Bank of England, they've now hiked rates 12 times to 4.5%. That represents the most aggressive and fastest interest rate hike campaign in history. Now, throughout history, every time central banks, they've engaged in interest rate hiking cycles, they've kept going until something eventually breaks. That's the current situation they find themselves in right now. Back when interest rates were near zero, global banks, they scooped up record amounts of bonds, but as traders know, when interest rates go up, bond values, they go down. And that's one of the major reasons why a whole lot of banks right now, they find themselves in deep trouble. The rapid pace of rate hikes, that has meant that bonds held by banks, they've fallen in value. They're now trading significantly below what was paid for them, and currently the value of unrealized losses in bond portfolios held by some of the world's most recognized banks, it's close to hitting $2 trillion, and that number is going up by the day. So far this year, higher interest rates, they've resulted in the second, third and fourth largest bank failures in history, which have all occurred in the past 2 months. As the global banking crisis continues to escalate, so do the ripple effects. The knock-on effect on the banking crisis, that has fueled a global credit crunch, resulting in banks around the world implementing stricter lending conditions, making it extremely hard for individuals and businesses to qualify for loans, mortgages and credit. Simultaneously, credit card debt has crossed $1 trillion for the first time ever, whilst business bankruptcy filings, they've also shot up to the highest level on record since 2008 global financial crisis. All of this ultimately indicates that recession is now unavoidable. In a recession, unemployment soars, purchasing power that decreases, and overly inflated assets such as real estate and global equities, they plummet. Finding safe havens to store money becomes particularly important, which would explain why commodities, they're everyone's favorite trade once again. According to Goldman Sachs, we're now at the beginning of the great rotation of people as they start to pull their money out of risky assets and switching that into commodities to maximize on the hugely attractive benefits of safety, diversification, and high returns on offer in the current economic climate. That exact view has also been echoed in new reports released by the International Monetary Fund, showing that commodities, they've now overtaken real estate and stocks to become the world's number one asset class. And it's not just retail traders rotating their wealth into commodities at one of the fastest paces on record. According to Bloomberg, many of the world's biggest and most powerful financial institutions, they're now rotating their wealth into commodities. Royal Group, an investment firm controlled by the Abu Dhabi royal family, they've now shifted $800 billion portfolio towards commodities after accumulating massive short positions worth multi-billions in the US dollar and global equities. Elsewhere, billionaire trader Stanley Druckenmiller, who alongside George Soros broke the Bank of England back in 1992 by shorting the British pound and making multi-billions in dollars in the process, he's revealed he currently holds one of the biggest short positions ever on the US dollar, with significant bullish exposure to commodities. With so much hot money chasing commodities, it's no surprise that commodities, they've firmly positioned themselves as one of the best performing asset classes of 2023. So far, within the first 5 months of 2023, a total of 27 commodities, ranging from the metals to the energies to soft commodities, they have tallied up astronomical double to triple digit gains. And this is just the beginning. Right now, we're seeing commodities, they're notching up spectacular double digit gains of 10% or higher in a single week, sometimes in a single day. And just think about that for a second. In today's inflation adjusted terms, your money sat in the bank will not even earn that sort of return in a year, or even 5 years from now. That's why it's no surprise that banks around the world, they're struggling to retain deposits, and logically it makes no sense why anyone would want to leave their hard-earned capital sat in the bank on a 0% interest rate while simultaneously allowing inflation to devalue their purchasing power when they can achieve weekly returns of 10% or higher by actively managing their wealth through trading. Right now we have crisis on top of crisis, which, as traders know, that translates to opportunity on top of opportunity. This is the time that traders wait decades for, because it's times like these that make millionaires and billionaires out of regular people. There's a lot of traders out there that completely missed out on two of the previous greatest wealth transfers in history, including the global financial crisis of 2008 and more recently the pandemic in 2020. The ones that saw the opportunity and knew how to capitalize on it, they accumulated life-changing wealth. But once again, we find ourselves at the forefront of one of the biggest wealth creation opportunities of all time. The explosive cocktail of events that is currently unfolding, that now presents the third greatest wealth transfer of our lifetimes. More millionaires and billionaires, they will be made this time round than ever before. The only question is, will you be one of them? Do not underestimate what you can achieve in the next 1 month, 3 months, 6 months, or even 12 months from now. Here at the Gold and Silver Club, we're consistently banking over 10,000 points of profit per month, which has been transparently documented throughout our weekly videos. If you're trading at one lot, that's $100,000, or if you're trading at 10 lots, that's $1 million. The majority of our clients at the Gold and Silver Club, utilizing our proprietary research-driven trading approach, they've already made in excess of 6 and 7 figures, and we're only in May. Historically, each time commodities have started the year on a positive note, they've always gone on to finish the year outperforming every other asset class out there. These past few months have just been a taster of what is yet to come. If you want to take advantage of these extraordinary markets and huge money-making potential on offer, there's no better time than now. Go to jointhegoldensilverclub.com to learn how our mentorship program can take your trading to the next level. Time is the most valuable commodity that we have. Certainly make sure that you don't waste it. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into next week. So firstly, moving over to platinum, as we discussed with you on Thursday's report, we were shorting platinum here after Wednesday's CPI data. And you can see where platinum prices, they've essentially cratered over Thursday and Friday here. So they broke down 4% on Friday. In fact, we took the opportunity on such fast profits to bank 500 points profit with our clients at the Gold and Silver Club, protect that trader, and the profits have been very quick for the platinum sell short. So well done to everybody who also capitalized on that move. As we discussed with you previously, we've built into a dollar long position as well over the course of May. That had a lovely pop to the upside on Friday. So again, we scaled out or more profits on this trade, banking into strength after we saw the breakout, which followed through after Wednesday's CPI data. We then broke out on Thursday and Friday with the dollar index. That trade idea also worked out perfectly. And now, as we discussed previously, you've got hedge funds, money managers, many funds out there. They've been FOMOing in to gold, silver, and platinum over the course of the last 2 to 3 weeks here, buying at the top, and now they're bag holding because you've essentially seen such a significant sell-off. We've talked you through it before. The overall narrative typically over May is sell in May and go away. It's there for a reason, because typically over this month the dollar outperforms many commodities. They pull back, they give you opportunities to sell short the commodities and then buy back in lower prices as you transition into the next month. So if we have a look at silver, silver prices, they broke down 7% to the downside last week, and you can see the fake out that we had as well on the CPI data, where silver broke out towards $26 per ounce. Then by the end of the week, it's trading back below $24 per ounce. So we've seen silver get slammed to the downside, that alongside platinum, which we talked you through our sell short on this market, and gold as well. You can see the spike high after CPI data. We pull back to 2010 US dollars per ounce. Again, these markets are where many hedge funds, money managers, they've bought in much higher. It's all coming out within the data that they've very clearly bought at the highs, at the top of the move, expecting the price action to continue higher. Whereas, as you know, we've been expecting a sell-off here. We've been expecting the dollar to break out. We've been expecting the metals to sell off in line with the normal capital flows over May, which is normally more of a risk-off month for commodities, which can give you fantastic opportunities to sell commodities and then buy them back lower as we transition into the next month. Now, another setup that I'll put on your radar as we go into next week is copper. So copper did indeed have the breakout that we expected on the public holiday on Monday. There's going to be another public holiday at the end of the month here. Copper typically does really well when you've got the LBMA close, when you're not getting London fixes for the price action of the metals in the morning and the afternoon. This is often where copper does spike. So I do like the price action where it is sat at the moment, right at the lower end of the channel. It also broke down on Thursday and Friday, but unlike gold, silver, and platinum, we actually saw a reversal to the upside on copper here on Friday from the recent swing lows. In fact, you'll see that we retested the lows that were last at these zones back in January at the beginning of the year. So I do like the risk to reward profile of copper at the moment. As we discussed with you previously as well, we've been expecting a breakout on natural gas, and we definitely saw that on Friday. So natural gas on Friday, it spiked up 5% to the upside. This is a market where we've also built into exposure at the swing lows. So a lovely breakout to the upside there on Friday. And then finally, of course, we've got oil too, which we identified with you previously. Massive opportunities as we moved into the FOMC statement the previous week. We were expecting a break all the way back down towards the swing lows, as we knew hedge funds and money managers that had exposure to oil going back to after the OPEC cuts from the 1st of April, that 91% are long. Many of those have been liquidated now with a break all the way down to the swing low, and that provided a fantastic opportunity to build out that position as well. Same as before, really, as we go into next week. Any further weakness on oil retest back towards the swing lows, I would absolutely perceive those as a buy opportunity. And whatever long-term goal you're looking to achieve through trading, whether that's to create a full-time income, a second or replacement income, or just to earn a better return on your savings, now is the time to take action to give yourself the gift of a better 2023. If you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, then you need to adapt your strategy to the current market conditions, and most importantly, utilize a professional, research-driven approach. One of the biggest obstacles that holds back 99% of retail traders from achieving their desired success, it's not having access to the correct professional strategies, institutional level data, and market intelligence to make confident decisions with accuracy and certainty. There's a huge gap between the top 1% of professional traders and the bottom 99% of misguided retail traders who simply rely on outdated technical analysis and gimmicky technical indicators that won't work in these markets. If you want to get yourself out of the bottom 99% and into the top 1% who are actually crushing it and making 6, 7, and 8-figure returns in these markets right now, then you need to utilize a professional, research-driven approach, or you'll just end up wasting lots of time, money, and effort. You'll have no results to show for all of your hard work. In these rapidly changing markets, you need to be constantly innovating and evolving. Technical analysis and outdated technical indicators, they won't work. Those days, they're long gone. If that's all you're relying on, the odds are already massively stacked up against you. If you want to change your results, then you have to change your thinking. If you want to learn our exclusive, research-driven approach that is never taught to the retail market and only reserved for professional traders in banks, hedge funds with access to powerful game-changing insights, including where the banks and hedge funds they're buying and selling, key liquidity zones so you can enter and exit the markets with pinpoint precision, alongside the fundamentals, the macroeconomics, the capital flows, the daily, weekly, monthly, and quarterly real-time data-driven cycles, the intermarket correlations, the ratios, then you need to join our mentorship program. As we head through May, we are in one of the greatest eras of wealth creation that the world has ever seen. And if you want to capitalize on the huge money-making opportunities ahead and build significant life-changing wealth, there's no better time than right now. If you want to upgrade your income, then you have to upgrade your skills. Never underestimate what you can achieve in the next few months from now with the right guidance and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will, of course, get in touch with you ASAP.